pronounce that correctly?
MAI.
MAI. MAI. I didn't know whether it was a word or an acronym. What does it stand for?
It stands for all good things come to those who wait.
All right, that sounds fine. Let's talk about how you see the market now. I know you're encouraged by the inflation numbers, but you're also a little bit apprehensive, shall I put it, about the fact that interest rates have risen at the fastest pace in 40 years. That's number one. And number two, the yield curve has been and remains inverted. These are typically very difficult things for a bull market to overcome.
Right, and I'm getting a little impatient, Tyler, with the Goldilocks metaphor. I think it's overplayed.
Get her out of here.
Get her out of here. Look, the porridge is fine right now, but in a little while, it'll get cold.
Yeah.
And what I mean by saying is that right now, the bulls and the bears both agree that higher rates will lower inflation. So we've seen that. So that doesn't really prove much. But the big question is, what happens next? What happens when the porridge cools? So will we avoid a recession? And to say that we're going to avoid a recession and be a bull here, you have to think that the fastest and highest interest rate hikes in 40 years won't cause a recession. And I think that's just a difficult bet to make historically. I don't want to be on the wrong side of that bet.
But you've got a lot of countervailing issues. I mean, you've got the AI boom that is lifting a lot of technology stocks. There is certainly going to be investment by companies that are not in technology, right, to prepare for the AI boom. You have a strong consumer economy as well. Housing is doing okay. So there are a lot of things that would argue that, boy, if there is a recession, I don't see it right now. And a lot of people have been talking about it for a year and a half, and it hasn't come.
A year and a half is almost the magic number, though, Tyler. That's about how long it takes for these interest rate hikes to really kind of grab on. So the curve's been inverted for about 9 months. I'd say 6 further months down the road, you're really going to see corporate earnings slowing. You'll see housing start to slow down as the mortgage bites, and folks are holding their houses off the market right now because they don't want to sell and double their mortgage.
Why would you sell and go and take a 7% mortgage and pay a hell of a lot more for the next house you own?
Right. Now, I'm not saying the inflation numbers will get worse. I think they'll continue to improve, and that's going to buoy the market for 2, 3, 4 months. And that's an exciting time to invest. That's good. The problem is it doesn't end there. There's a second half to that story. And so I just ask investors to be aware of that.
Well, we know you like kind of being in areas that, I don't know if the word is contrarian or, So we talked about the home builder stocks most famously when they were trading at 2.5 times about, a year ago, whatever that was. I look at your list and I see Disney.
Right.
And I think this is not a stock that many people want to talk positively about right now.
Right.
But you own it, and you're talking about, the media names, and just what's the play here?
It's funny. It's kind of the flip side of the Goldilocks scenario, is the anti-Goldilocks scenario. So Disney, everything is going wrong for Disney. It's streaming. It's the parks are slowing. Everything is going wrong. So that's exactly the time you want to buy a great company if you think it still has a great future.
But how do you know if it still has a great future?
Well, if you're not going to bet on Disney in that world, who are you going to bet on? There are some also-rans that are going to have trouble. But I think as the Disney stock, and today's a great example, it goes down and down and down, boy, it starts to get quite interesting if you have a 3 to 5 year look.
Meaning, would you say it doesn't have to be about Disney, but maybe there are other media stocks, like do you think the whole space is interesting, or is there only a certain area to there?
I think a good analyst would be sharpening his or her pencil right now and figuring out where to pick through the rubble, because I think it's going to get worse. I mean, this strike is going to last a while, I think. And because I think, just like Tyler was saying, the AI is changing the world, and money is going to go to places we don't expect yet, especially in places like entertainment. And so because they don't know how it's going to sort out, these executives are going to wait. They can't offer a good enough price for the actors and the writers because they don't know what revenue is going to be like. So it's going to be a tough go for these people.
And there are lots of very thorny issues surrounding AI and the writer and performer contracts. I mean, it is really gnarly, and how those folks are going to get long-term compensation out of the projects they work on.